Welcome back. You're watching the Money Show, and let's start answering your portfolio queries. On the show, I have with me Pankaj Mathpal from Optima Money Managers. And good evening. Thank you so much, Pankaj, for joining in today. And let's also connect with our first viewer online who's there with us. And okay, I have Mr. N. Laxmi. Hi, good evening, sir. How are you doing?
Fine, thank you.
Okay, you're calling from Hyderabad, and the details that you have sent us, you want to invest 5,000 ICICI Nifty Next 50 ETF and Motilal Oswal Nasdaq 100 ETF through a monthly SIP, and you want to build a corpus, and this corpus will be for your 7-year-old grandson. Okay, I just want to understand what's the kind of corpus are you looking at, or is just wealth creation for your grandson? That's the aim for you right now.
It is only wealth creation. No specific.
All right, sir. Any specific reason why you have selected these ETFs, and because there is no restriction on the time frame, why not an active strategy, and why are you focusing more on the passive side?
No, basically, I already have an exposure by way of direct investment to the large stock companies. So I thought this is a diversion or from the
Okay.
regular.
All right. So let's help you out with this. And Pankaj, although it's a very great cause for which he wants to invest for a long term, but then again, I was wondering on the route that he has taken. Although it's not wrong to have a passive strategy, and he can aim for a corpus adopting the strategy as well, considering he already has a direct exposure. I don't know if it's for the same reason or same goal or not, but how do you look at this kind of strategy?
Kavita, good evening. Laxmi, good evening. And as you mentioned that you have been investing in mutual fund, you have exposure to that, and now you want to add these ETFs to your portfolio. So there's nothing wrong in that having ETF, because it's a very simple strategy and very easy to understand. But see, I'll tell you, if you invest in active fund managers, they not only try to maximize the returns or outperform the index, but also they try to manage risk. So sometimes it is a better choice to invest in active funds for long term. But if you say that you want to have both in your portfolio, active and passive, and you have already taken exposure to active, so this can be a good choice. But the selection of these ETFs, I would say that some changes can be made. Means as you have decided to invest in ICICI Prudential Nifty 50, next 50. So instead of next 50, my suggestion would be that you invest in ICICI Prudential Nifty 100 ETF. Because when you say next 50, it means you are skipping first 50 top companies and next 50 only you want to invest in. But if you invest in Nifty 100 ETF, it means you will have exposure to all 100 large cap companies. So that can be a good choice. Second thing about Nasdaq 100 ETF, for international exposure, it is a good choice. So you can invest in that. But as you mentioned that you want to invest 5,000 each, I will say that in domestic ETF, I mean Nifty 100 ETF, you should have larger exposure compared to the international. So if you want to invest 10,000 rupees, better 7,000 in ICICI Prudential Nifty 100 ETF and 3,000 in Nasdaq 100. That can be a better choice.
All right, Mr. Lakshmi, is there anything else you want to ask Pankaj?
No, actually, I also wanted to ask whether between
Sure.
Nasdaq 50 and Nasdaq 100, which is preferable?
All right, Pankaj?
Nasdaq 100 or international ETF, Nasdaq 100 will be a right choice.
All the best, Mr. Lakshmi. Let's move on and let's take Mr. SK's question. Pankaj, he's been investing around 35,000 via SIP since last year. He's got 14,000 SIP in Axis Small Cap and 21,000 in SBI Multi Cap. Additionally, he has a corpus of 15 lakh in the stock market, which is growing for him slowly. And he aims to achieve 3 crores after 11 to 12 years. And he's got some financial responsibilities which he wants to pay off via this corpus. Now, he wants you to help him achieve that particular particular goal. So 35,000, but I think he can diversify this further in more than 2 funds. What do you say?
Yes, Kavita, I agree with you. First thing, through this question, I want to say something to all the viewers. See, I see many times that investors have invested in direct equity shares. Nothing wrong in that, but as he mentioned that his portfolio is growing slowly. So when you have multiple stocks in your direct equity stocks portfolio, and you know that mutual fund also has a portfolio of means 30, 40 stocks, so it is difficult to outperform the mutual fund portfolio. So there's no point in investing in direct equity shares. Either you invest in mutual funds, or if you have good knowledge about the direct equity shares, then you should have selected 4, 5, 10 stocks in your portfolio, and those stocks with the aim that those will outperform the index. So for the investors who have limited knowledge about the equity market, always mutual funds will help them better. So to Mr. SK also, I'll say that if you feel that a portfolio is growing slowly, better you switch to mutual funds. This 15 lakh rupees, you can buy good diversified mutual fund schemes. At the same time, for this SIP also, what he's doing. So if I calculate at around 12%, in 12 years, he can expect around 2 crore rupees. But the target is 3 crore. For this simple suggestion, if Mr. SK can step up his investment, means this 30,000 rupees SIP, step up by 10% every year, that can help him achieve his goal.
All right, let's move on and let's take Laxmi Narayan's question. He says that he is 43 years old and has invested lump sum amount in various mutual fund schemes. The schemes are HSBC Small Cap, Motilal Oswal Large Cap. He's got Parag Parikh Flexi Cap, DSP Multi Cap, SBI Energy Opportunity, SBI Magnum Children. And his goal is to accumulate 1 CR for a new home in 10 years and 2 CR for retirement in 15 years. And he wants you to review his portfolio and suggest the necessary changes that he should be making.
Kavita, Mr. Laxmi Narayan is not doing SIP. I think he has only lump sum investment. So if I
he's
consider
got
this,
a lump sum investment.
yeah.
Right.
So what 7,65,000 rupees, if we expect 12% around return, it will be something 24 lakh after 10 years. So his first goal is also means quite big. It's difficult to achieve in 10 years with this kind of investment, only lump sum. So my suggestion, along with this, Mr. Laxmi Narayan can start SIP. So if we say 30,000 rupees per month SIP, Mr. Laxmi should start from now onwards, and also 10% step up every year, then I expect that you'll be able to achieve your both goals.
All right, with that, it's time up on the show today. Thank you so much, Pankaj, for being on the show and helping our viewers formalize a strategy for their financial goals. And before I sign off, I'm going to leave our viewers with our WhatsApp number and email ID, where you can keep sending your portfolio-related queries, and we will do your live planning on the show with our experts. Thank you so much for watching. Goodbye.
If you like this video, then like, share and subscribe to ET Now.